The 19 million Bitcoin will be mined in just under a month. There's only going to be 21 million Bitcoin ever made. Inflation hits a 40-year high of 7.9% this year. Short-term liquidity crisis on Bitcoin and other assets. What does this mean for crypto? What phase are we in for crypto? Are we in a bear market, and where to from here? Stripe announces this morning they will be accepting crypto and NFTs through their payment gateway. What is ETH 2.0? What is the difference? How does this work? What is proof of stake? What is proof of work? We're going to be jumping in all to that. Very simplified. And also NFTs for businesses. Are NFTs the future, just like websites were 10, 20 years ago? All that and more today in crypto. Thanks for joining us. My name's Ben. Please like and subscribe if you like this daily content coming at you for a little 8 to 10 minute wrap up daily of the crypto markets. Now, overnight, we saw Bitcoin give back mostly all of its gains that it had intraday yesterday. What we saw yesterday was probably a bit of a buy the rumor, sell the news event. Bitcoin coming back down 6% overnight, back down below 40,000. We have seen across the world rising fuel and food costs, not only in the US, but across the board. Fuel right now, I think it costs me $160 the other day to fill up the car. You know, inflation is real. It's hit a 40-year high of 7.9%. And this is only the calculated number that the government puts out. In the real world, it's actually a lot higher than that. Like if you look back 1, 2, 3 years ago, what you paid for a pair of shoes or a car or rent or a house, like it's a lot more than 7.9%, but this is the number that they calculate the way they do, which in my opinion is wrong, but it's going to get pretty bad here soon, if not already. Like rising cost of energy. We're on a live stream last night and one of our members was chatting about, well, you know, how are people going to invest money if they can't even afford to live and eat? Like they're just living paycheck to paycheck. And I think the cause of recession is coming up. Raoul Powell's been really sort of pushing this narrative. He's basically saying a recession is not guaranteed, but it's basically close to guaranteed. And Bitcoin, like all other assets, when there is a short-term liquidity crisis, when people are panicking, people need money, they go to liquid assets, they go to property, they go to stocks, they go to whatever they can to get their hands on cash. And Bitcoin is correlated in that risk bracket in the short term. Over the long term, do we think that it's going to be bearish conditions forever? Well, no. The long-term trend is that Bitcoin is deflationary, and the 19th million Bitcoin will be mined in just under a month. There's only going to be 21 million Bitcoin ever made. Unlike fiat currency that is exponential and continues to be printed and the supply increases, the dollar, it will continue to devalue. Everything that's denominated in the US dollar will continue to be devalued. You have to have assets, and I know for some people they can't afford that. Even talking about my mum and dad and trying to get them to invest a little bit more, like they're renting and things like that. It's tough. Like a lot of people are living this paycheck to paycheck. So it's trying to dollar cost average any additional cash you have that you can afford, putting into an asset that you can start to hedge against this continual debasement of the currency. Bitcoin back down now to 39,200, effectively giving off all the gains that I had last week. Again, the volatility against traditional stocks. The stocks had a bit of a bounce off the back of Biden's executive orders. Things like PayPal, Coinbase, Robinhood, assets like this had a bit of a bounce. But again, like even looking at the Meta, like the Facebook stock, down 48% over the last 6 months. Like everything has just been sold off. So in the short term, yes, we're going to see a pretty crazy volatility, and who really knows where to from here. But I think over the long term, Bitcoin specifically will continue to be the place that I continue to put my assets. I continue to dollar cost average. And if we go on further, I'm just going to buy more. Like end of. Looking at the accumulation trend score here, we have some on-chain analysis. Just looking at over the past, this is a new chart from Glassnode. You can see in the yellow, this is the distribution phase. So when you see distribution, which is people sending their coins, selling their coins, happens at the top of the cycle. Accumulation phases usually happen in bearish or sideways trends before price goes up. And the accumulation phase is when you make your money in crypto. Right now, we've seen accumulation basically occur right back from September last year. And we are seeing a little bit of distribution right now with the macro uncertainty. So we are chopping a bit sideways. We're going to see short-term volatility, but nothing's changed fundamentally for Bitcoin. It is still a hedge against everything that's going on. And I think over the long term, once we get through this short-term uncertainty and in this liquidity crisis, Bitcoin will shine through. Payment giant Stripe just launched its payment support for crypto and NFTs. This is pretty big. Us as a business, personally, we use Coinbase Commerce, which is just absolutely dreadful in my opinion. Having a payments behemoth like Stripe bring in crypto payments, the UI, the UX for merchants is going to be fantastic. For people using the platform, it's going to be great. And I think we'll start to see a lot of other e-commerce businesses now being able to accept crypto through Stripe. So I think we're going to continue to see the payment support of digital assets continue to rise, and I'm really excited to see where this goes over the next couple of years. Now, Ethereum 2.0 is nearly ready. Well, it's been happening for a little while now, but basically what Ethereum 2.0 is trying to do is it's moving away from its proof of work consensus algorithm, which currently Bitcoin uses, to proof of stake. And really the key difference here is proof of work is when the blockchain, which is basically the database, needs to have a consensus of everything that's happening on the network. And the way it has that consensus is the miners solve a complex mathematical equation to generate the new blocks, and then they earn the rewards, and it basically saves the transaction on the blockchain. Now that does consume a lot of energy. So what Ethereum are trying to do is move away from proof of stake onto proof of work, sorry, the other way around. And the way that occurs is by having validators on the blockchain lock up their crypto assets to secure the network. So they've been trying for a long time to do this. It is very difficult, but basically saying here the Ethereum community has been working to change how the currency is created in order to radically reduce the blockchain's carbon footprint. And the method it's working towards is called proof of stake. It's going from proof of work to proof of stake. Bitcoin currently uses proof of work as well. So it'll be interesting to see how that plays out over the next few months. But at the moment, there's over $25 billion in Ethereum locked up in the depositing address to assist Ethereum to move to that new consensus model. Now, finishing up here on NFTs, Warner Bros. Has announced they'll be creating 6 million DC Comics trading cards with redeemable NFTs ranging between $5 and $120. So it's awesome to see Warner Bros. Come on over. I think we'll continue to see more businesses come to the NFT space. FTX has just partnered up with one of the biggest music festivals in the world, Tomorrowland, and they're looking to sell over 400,000 NFTs to its customer base. So that's unbelievable. And Gary Vee tweeted yesterday, which I thought was really interesting, around having NFTs for your business will be like having a website in 2005 or having a social media account in 2015. It's just digital infrastructure. NFTs fundamentally in the short term, obviously we've seen a lot of price retracement. I think it's a natural market cycle. We'll see all the people that come in for a cash grab move out, and we're going to see the businesses that are going to be around for the long term rise to the top. So NFTs obviously over the long term, I think it's a great business model, and I think the best projects will continue to build and be great value and good investments. That's all from me today. I hope you've enjoyed. If you like these daily videos, if you have any feedback, please let me know in the comments below. Give me a like as well as a subscribe. I will see you next week. Wait for the weekend. So have fun and chat again soon. Cheers.